I mean, let me come to Biola in this case, because this report says that the investment that the U.S. Government is planning to do here in Africa, it's in a way to benefit them, to open the road for Africa, to create markets for their own companies in, here in Africa. Biola, what does that say about our own ability to develop our economy, that whatever money comes into the country will benefit us, even if it's going to benefit other people, but at least we'll benefit more from it?
Thank you very much. I think I would look at investments irrespective of where it's coming from, whether it's coming from the indigenous entrepreneurs or it's coming as a foreign direct investment into Nigeria. Investment typically is what is required to actually develop a country. But beyond that, I think it's also very important to look at the the Obama initiative with respect to collaboration between the African countries and the U.S. companies. I think it's not an investment by the government. It's actually just a collaboration that the government is driving in the U.S. to actually encourage more and more American companies to actually come into Africa. And I think I would say that is late, but maybe not too late. I say it's late because we've seen a good number of European countries, for example, taking the lead in Africa. And also in recent time, in the last 2-3 years, particularly in the last 5 years, we've seen more and more flows from the Haitian economies. And we've had this kind of summit, for example, in Asia. We've had more and more of it in the past in Europe, even on a bilateral basis, not even in terms of having all the African leaders in a session and, of course, discussing with companies. But I think the interesting is the fact that more and more American companies are beginning to join the likes of GE, for example, that has been in the country for quite some years, and they've done significant investments in key sectors of the economy like healthcare, like utility sector, for example, and, of course, they continue to partner with indigenous companies like the Transcorp Ughelli power plant, for example, where they have a partnership with Transcorp to actually overhaul the power plant they just acquired. But I think it's also very important to look at it from the perspective of the significant improvement in terms of indigenous capital that we've actually mobilized over the last couple of years. Either you look at it from a pension fund perspective, or you look at, which of course is another big pool of asset where we can begin to channel to investment going forward, or you look at it from the perspective of individual entrepreneurs in Nigeria that are actually sprung up in the last 10 years. For example, you find the Tony Elumelu, you find people like Jimovia, you find people like Otedola, for example, and these are people driving Dangote, for instance, that have made significant impact in Nigeria in terms of investment into the industrial space, oil and gas, and some other sectors of the economy. So I think it's interesting to actually look at it from a challenging point of view for the American companies who are beginning to come into Nigeria, which is why a good number of them, for example, are looking at actually partnering with the African entrepreneurs, because they believe that the Africans actually understand the African market better than they do. So I think this kind of partnership is good. I think we need to see more of this, and I think they need to take it forward with respect to implementation. So it's not just signing agreements or MOUs that matters to us. I think the most important thing is to actually see us beginning to see the impact on the different sectors of the economy that actually have more impact on the people and, of course, the overall economy beyond these isolated sectors like oil and gas, which is very important for us. And I think we're going to see that going forward. But I think irrespective of where the investment is coming from, whether it's coming from the local entrepreneurs or the foreign entrepreneurs, I think the most important thing is the nature of those investments and the sectors that they go into, and how holistically the benefits accrues both to the local economy, and, of course, the investors also have to take their returns back to their country. It's normal.
When we talk about foreign direct investment, little has been said about manufacturing in Nigeria. Is anything going on in that regard?
Yeah, a lot is going on currently now. Even the partnership with American government as well, in terms of encouraging their businessmen to come to Nigeria. One, it indicates one important thing, that the Europeans and Americans are beginning to have interest in Nigeria. And in any investment, the payback period is important, and then the business environment is also very important. Currently now we have challenges as well, and so most of these investors, they tend to want to go to area whereby they can guarantee their investment, because one of the major difference between portfolio investment and foreign direct investment is that while portfolio investment can be moved within a second, you can't move your foreign direct investment like that. It's an irreversible investment. So
do investors now prefer portfolio investment?
Definitely, because within
more to foreign direct investment.
So that they want to go to area whereby, one, they can easily have the returns immediately. Two, they can guarantee that even if there's any problem, they can withdraw their investment within seconds as well. So going to the management sector requires a long-term investment planning as well, and political environment as well. As it is today, everybody knows that maybe it's not that stable. So it is until we build the confidence as they are moving into service sector, we know it's going to at least go down into the management sector with times, if we can even get things right in terms of our politics and social challenges we are having in the country. But currently, as it is very low. And Ajakaye in 2001 wrote a paper, and he said that one of the danger of Nigerian economic policies now is that we tend to encourage the service sector. And therefore, it's like maybe you are a child jumping from, maybe you want to jump from crawling to running. That the first thing that's supposed to be done in the economy is that to develop the agricultural sectors, they move on the agriculture are able to provide food for the people and provide excess to be able to use to even feed people who are working in industry and provide raw materials for the industry as well before you now go on to the industrial sectors before you now go to service. If you have a service sector that maybe is not producing the goods as well, then you are going to service other people's economy. So, but given that as well, we're already in that stage now. So the current initiatives to encourage foreign companies to come to Nigeria is that, one, if they come in through the service sector and we now have the demand, then we can now let us think about supplying them locally. Like this auto policy as well, that's the motive that, well, Nigerians are really, they love cars a lot, and therefore we have the demand. So now we can encourage people now to come to the country, begin to at least, or just to assemble, and then later we produce. So currently now, not much is being done in manufacturing sectors, but they are laying the foundation, at least it is infrastructure now, to encourage people now to go into manufacturing sectors when the political space and social factors we are facing in the countries is gotten right.
Maybe I should just make a point there. One important thing about FDIs to manufacturing space is the fact that I'll just take it off from the survey that is just concluded by the Ernst & Young, one of the big four firms in Nigeria, the accounting firms in Nigeria. They did a survey on the African continent about perception of foreign investors in Africa. And of course, it's quite interesting to actually note that we're beginning to see a shift to the consumer goods companies from the natural resource sector. The interesting thing is the fact that this would also improve the level of investment that you find in the manufacturing space. And I'll give you a simple instance. For example, we've seen that share of manufacturing sector rise to about 4.3% in 2013 in terms of the share of foreign direct investment in Nigeria, and that's coming from almost about barely 2% in the last couple of years. We've seen companies, for example, another interesting findings of that survey is actually the fact that the companies that have been in Nigeria for more than decades now, they tend to get more and more comfortable with Nigeria because they now understand the market better. But of course, there's still a very wide gap in terms of perception between those investors who have been here for some years and those who are just looking into Nigeria. So what people hear, for example, about Nigeria is Boko Haram. What people hear about Nigeria, for example, is Ebola. People don't seem to understand, particularly when I say people now, I'm saying the foreign investors now out there, the Americans, the European companies. They don't dig deep to understand the realities of the opportunities that lies here in terms of the market, in terms of the reforms that are ongoing, in terms of the opportunities for even abnormal profit, if I may put it that way, which is why, for example, you see companies like Procter & Gamble, you see companies like Nestle, you see companies like Unilever, PZ will continue to ramp up their investment in Nigeria almost every year. For example, Lafarge has been in this country now for more than 40 years. We've seen a significant investment in the last 3 years, and of course, they're making more. They're just planning another $250 million, for example, plant expansion in their Ashaka cement plant in Gombe. So the more people come into the country, the more they get comfortable with respect to the risk level and here, and of course, the more they continue to appreciate the opportunities here in terms of the returns that they may actually get out of the manufacturing space in Nigeria. So I think it's something that would come, and we're beginning to see that shift to the consumer space. The more we see middle income class evolving, the more we see skilled labor evolving, the more reforms that we see that opens up the manufacturing space. And of course, infrastructure is very important because this is a long-term investment as against foreign portfolio investment, which is short-term in nature.
Okay, let me come to Dr. Shaibu. Let's talk about government policies. You were trying to talk about the auto policy just a few moments ago about locally assembled vehicles that is just starting up here in the country. How well has government policy aided foreign direct investment in the country, and what has been the outcome?
Yeah, the government has really been trying to encourage foreign direct investment in the country, but it's, the investment as a environment generally, and then the investors as well, like Razak said, it's about confidence and trust and your own personal calculations and assessment of the environment, that even if all these incentives are there and you still believe that, well, it's not enough and it's not in the direction you want, then you may not come in. I think, for instance, the major challenge we are facing in this country on investment is the energy cost. And once your cost, in terms of maybe your operation cost, is still very high, especially in terms of energy, which is supposed to even be cheaper. So then again, definitely, no matter what incentives they provided, may not really stimulate you to come into the economy. So, but it's, like I said, it's gradual. Like, for instance, now, the investment incentives that are being provided, the tax reliefs and other incentives that are providing to these people as well, And as we are getting it right in energy sectors, and then the investment there are getting to yield results, maybe all these power plants are being built as well, begin to generate sufficiently, and we're able to transmit them effectively as well. We boost the energy supply, and again, that means bring the cost a little bit down, because most of these industries are running on generators and coal, and this really build up their cost. And when you calculate, the bottom line is what is there for me at the end of the day, even when you have other incentives. So the incentives are there, and until the other complementary policies are also put in place, then again, that may not be good enough for them to come in. But at least gradually the confidence are being built over the period, so we get there right way.
I think if you go back to the statistics that you actually read at the beginning of the session, you actually said that foreign direct investment has actually moved from about $2.1 billion some 14 years ago in 2001 to about $11 billion in 2009. That tells you what democracy has done. Because ever since the inception of democracy in 1999, we've actually seen significant openness of different sectors of the economy. I'll give you a simple instance of telecom. Telecom before democracy, for example, of course, it was in 2001 that we actually opened up the telecom space. FDI flows to that sector was close to zero. But of course, now we have an average of almost about 7% in the last 10 years, not until 2012 when we actually saw a significant decline. And of course, in 2013 again, the percentage of FDI flows to telecoms has actually been around 5%. And that's to tell you that the more openness of a sector, the more attraction. And of course, which is why you need to get the reforms right. You need to get the fiscal regimes right. You need to get the incentives right. And of course, the market efficiency is very important, which is the most important thing. And I think the government is driving that across all the different sectors, which is why I personally think we'll continue to see more and more flows in terms of investment into Nigeria, both foreign portfolio inflows and foreign direct investment into Nigeria.
One last question I want to ask Dr. Shaibu. Looking at countries where this inflows are actually coming from, we have the US, we have China has been a big contender for Africa's space over the years. Of course, we're seeing UK and some countries like Brazil, Netherlands. What areas of interest do you think that they're looking out for in 1 minute?
They're looking for where they can make money quick.
Quick money.
Quick money. I think that's all.
Okay, I'm sure that's okay. Quick money where they can get the highest return on investment for the money.
And within the short time.
All right.
I think it's a play on the Nigerian consumer space. They're looking at the consumer sector. They're looking at natural resource sector, which is very important. A good number of them are beginning to look at infrastructure space and, of course, utilities. And I think these sectors will actually be the ones that will drive FDIs going forward. And, of course, education and hospitality, maybe at the end of the day, would also drive it when we see the right reforms in place. All
right. I think that's all we can take. Thank you so much. Our time is really up. Thank you for coming, Biola Razak, Head of Research and Strategy at the Associated Discount House, and Dr. Olufemi Shaibu is an Associate Professor of Economics from the University of Lagos. Thank you for coming.
Thank you.
Thank you for your time. We do appreciate it. And that will be it here on Business Morning. Thank you, our viewers, for also sitting back to watch. We do appreciate your time as well with us here on the program. I am Bolaji Akinwale. News Track is up next.